Hey everyone, and welcome to The Explainer. If you've ever been curious about investing, but maybe felt a little overwhelmed by all the options out there, you're in the right place. Today, we're going to pull back the curtain on one of the most popular and, frankly, powerful tools for any modern investor, the ETF. So let's dive in and see what makes it so special.
So let me just ask you this. What if you could own a piece of, say, the 500 biggest companies in the US, or all the hottest tech firms, or even a mix of global assets, all with a single click? I know, it sounds almost too good to be true, right? Well, stick with me, because it's absolutely real.
You know, to really get why ETFs are such a big deal, we have to look at how things used to be. For a very long time, building a smart, well-rounded portfolio was honestly pretty tough and expensive for the average person.
And that exact problem, the sheer cost and the headache of trying to buy dozens or even hundreds of individual stocks, well, that's what sparked a massive innovation in finance. People needed a way to get all that diversification instantly without the complexity and the high fees.
And that brings us to the hero of our story, the exchange-traded fund, or as pretty much everyone calls it, the ETF. This one simple idea completely changed the game for millions of investors, from total beginners to the pros on Wall Street.
So, what is it exactly? Well, at its core, an ETF is just a fund that holds a big collection of different assets. Could be stocks, bonds, you name it. But here's the real magic. The whole fund trades on a stock exchange just like a single share of, say, Apple or Tesla. And that means you can buy it or sell it anytime the market is open. It's that flexible.
If that still sounds a little technical, don't worry. Here's the easiest way to think about it. Imagine an ETF is like a pre-packaged shopping basket of investments. Instead of you having to walk down the grocery aisle picking out hundreds of different items one by one, you just grab one single basket that already has everything you want inside.
And these baskets, they come in just about endless varieties. You could buy a basket packed with stocks from the 500 biggest U.S. companies, or you could grab another one that's full of safer government bonds. You can even buy a basket that tracks things like gold or oil. It's this amazing flexibility that really makes them so powerful.
So as you can imagine, this whole shopping basket idea comes with some huge advantages. Let's break down exactly why ETFs have exploded in popularity to become one of the go-to investment tools on the planet.
You know, it's really the whole package, the combination of benefits that makes them so attractive. First, you get instant diversification, just like a big fund. But you also get the flexibility to trade it anytime you want, just like a stock. And on top of all that, you usually get lower costs, total transparency, so you can always see what you own, and often they're more tax efficient. It's a really powerful combo.
Let's just zoom in on the cost part for a second, because this is a huge deal. The annual fee for an ETF, which is called its expense ratio, is often just a tiny fraction of what you might pay for a more traditional mutual fund. Now, that might sound like just small pennies, but trust me, over years and decades of investing, that difference can mean thousands or even tens of thousands of extra dollars staying right there in your pocket, not someone else's.
Okay, but as with anything in life, no investment is absolutely perfect. To be a smart investor, you have to understand the other side of the coin too. So let's take a look at the fine print.
The most common comparison you're going to hear is ETFs versus mutual funds. And really, there are two massive differences to know. The first one is flexibility. ETFs trade all day long, their prices changing by the second, while mutual funds only get priced and traded once, at the very end of the day. And the second big one, like we just saw, is cost. On average, ETFs are just way cheaper.
There are also a few specific risks to be aware of. Because they trade just like stocks, you could get hit with brokerage fees if you're buying and selling them all the time. There's also this thing called tracking error, which just means the fund might not perfectly mirror the index it's supposed to copy. And look, here's a big word of warning. There are some really complex, exotic ETFs out there, things called leveraged or inverse funds. These are incredibly risky and for most people should probably be avoided. So, now that we've covered the what, the why, and the watch out for this, let's talk about the most important part. How you can actually put all this knowledge into action. So who are these things actually for? Well, the cool part is pretty much everyone. They're perfect for a beginner who just wants simple, instant diversification. They're absolutely ideal for a long-term investor who wants to keep costs super low. They even work for more active investors who want to target a very specific theme, like artificial intelligence or clean energy, without having to bet the farm on just one or two companies.
And getting started? It's probably a lot easier than you think. You can really break it down into 4 simple steps. First, you open a brokerage account online. Lots of great options out there. Second, you do a little research to find an ETF, a basket that matches your personal goals. Third, you just buy it on the stock exchange. And then finally, you just keep an eye on it over time to make sure it's still the right fit for you. That's it.
So if there's just one thing you remember from all of this, let it be this. ETFs essentially give you the best of both worlds. They combine that easy trading flexibility of a single stock with the powerful built-in diversification of a mutual fund, all wrapped up in one low-cost, easy-to-understand package.
The power to build a smart, diversified portfolio is literally at your fingertips. So the real question isn't if you can get started, but what you'll choose to fill your basket with. Thanks so much for joining us for The Explainer.